Morning, everybody. It is the 6th of January. We are Signal Centre Talking Bull. I am Joe Neighbour and I'm joined by Ian Coleman and Steve O'Hare. Good morning, guys.
Morning, all.
Everybody all right?
All good?
Yeah, all good, thank you.
Good stuff. Okay, so more fun and games on the coronavirus front yesterday, particularly in the UK. That set a new record. According to estimates, 1 in 30 Londoners is now estimated to have the virus, and the country's death toll spiked to 76,423. That's according to the Bloomberg coronavirus tracker. The fatalities have also outpaced the ones seen in Italy in recent days. Further restrictions in place across the rest of Europe, Germany extending and tightening their lockdown. Meanwhile, the WHO team are trying to enter China to investigate the virus's origin, but are being delayed due to visa issues, which sounds fairly typical for what we have encountered over the last 12 months or so. Aside from coronavirus, the big news was from OPEC. The Saudi Arabians have unilaterally cut their crude oil production by 1 million barrels a day during February and March, in an OPEC Plus deal that allows Russia to increase their output. And the concession late on Tuesday was hailed as a New Year gift to oil markets by Russia's Deputy Prime Minister, and that sent Brent futures higher by almost 5% at the end of the day. That did explain why we saw a decent bit of outperformance on the FTSE 100 yesterday of two massive oil majors in that market, BP and Royal Dutch Shell. We'll come on to those bits shortly, I'm sure. How's it looking in FX land, Ian? What's the latest there? Any moves yesterday?
Well, no, I mean, it's all about the dollar again, isn't it, at the moment? We've got this Georgia US Senate runoff, which is really, well, as far as pundits are concerned, it's really important. You can see how tight it is. There's 98% of the vote in. So people have been watching this overnight. Now, if the Democrats win, then it gives them basically power to do whatever they like, as far as I can see, for 2021. And that potentially will be higher interest rates, higher inflation, and higher taxes to pay for fiscal stimulus. And at the moment, it's looking like they're just about on it. So it's 50.1 to the Democrat Party and Republicans 49.9. So as Bloomberg have said this morning, it is too close to call, but a Democrat win should, and this is not me saying it, playing my book, but it should lead to higher US dollar. So this is what I tried to play yesterday. This is the dollar index, and we got long here and got smashed to pieces. Thought we were going to get some sort of reverse head and shoulders formation. We didn't get it. If we, and this is where symmetrical patterns get a little bit weird, because you actually put the extension tool on this wave as opposed to the actual waves moving down, and 127.2 and 161.8% of the areas where you want to be looking at, and it's just holding on to this 127.2% this morning, reflecting that back on euro dollar. I was looking at this 4-hour chart. This is the 161.8% extension, and I think if you squint really hard, we could potentially get a wedge formation, but I think we need to see some decisive price action before jumping into it, basically, because if this doesn't hold, or this formation doesn't break, then the next sort of upside barrier is all the way up here at 124.37, which will then be very close to this previous swing high that we saw from 2018. And if that breaks, then it opens the way up for a move all the way up here at 132.15. So I think quite a critical day for the dollar index and the dollar in general. Cable, again, these dips have been bought. I can't get any sort of patterns. I mean, I'd like to get in short, but a lot higher up, 139.52. Dollar Swiss, again, it's just hit this 161.8% pattern. That was a butterfly there, and like Elliott Wave and like a lot of these other sort of technical tools, you can just go, well, that's not a butterfly anymore, that's a crab formation. It's 161.8% at 224. So this is the next support level. If that breaks, then again it's a lot lower levels, 86, 87 to the downside for dollar Swiss. So I could keep on saying it's quite a critical day for the dollar. One to one, nothing's changed really for dollar yen. I still think 102.48, 38 is the support level, and obviously with oil taking a move to the upside, then Canadian or dollar against the Canadian dollar, so obviously Canadian dollar is strengthening, took a move lower, 124.92. We mentioned this yesterday. We said there was nothing really in the way of support until we get to this sort of 125 zone, which is still 170 ticks lower. Aussie dollar has broken out of most of the cipher patterns. There is a 161.8% extension here, but that looks like it's going to be taken out. And I think as far as these risk or dollar risk pairs are concerned, I think we're going to push up to these highs at 79, 75, sort of 80 the figure region, and New Zealand dollar's looking the same, 73.55 is a 261.8% extension level. That's all I've got.
Thanks.
Oh, this was something that we talked about yesterday, didn't we? Euro New Zealand, and it's just hitting that support level, 168.82, 168.70. If that bounces from there, this is quite a risk pair actually. So if that bounces from there, it could mean risk off for indices.
Yeah, cool. What are you seeing on indices, Steve? I mean, a bit of a mixed bag as far as I can see on the charts. Obviously, FTSE a bit of an outlier because of the oil influence, but everything else looks a little bit under pressure and possibly some top patterns for me. I don't know if you're seeing that.
Yeah, I think, like, as we said yesterday, that it's very difficult to argue against the indices on the medium term. They're at their all-time, in and around their all-time highs, and yeah, you've got sort of like bearish outside candles and things like that on the daily charts. That's the Dow. You've got the Nasdaq as well, so it's a little bit governed by that. So you're seeing a little bit of topping action. It's only short term, and it's only just sort of like intraday, sort of like a couple of days basis. It's going to sell off and then get bought again. There's no sort of
possibly. I quite like the look of the ASX maybe as a top.
Yeah, quite good. I mean, that's like a rounded top, isn't it? And bit of a head and shoulders type formation there. Maybe if we get a break around about the 65, 65, or definitely from the
basically the low of today, whacked on the same level that we saw on the 21st of December.
Yeah,
if you look at the sort of intraday charts, 4 hours, you can certainly see a bit of a head and shoulders, I think.
Yeah, or you see a really nice sort of triangle formation ready to break to the upside again.
Yeah, that's probably what you should be doing. Go with the trend.
Yeah, exactly. I think that's the thing. If we find, there's plenty of things out there to let you fight against these trends, but just accept them and look at China. China's looking pretty horny.
Oh, yeah.
Obviously, we've seen a lot of metals prices as well, sort of, continuing to pick up. Copper hit nearly an 8-year high yesterday. This is the chart we drew back a little while ago, and showing this double bottom formation.
Wow.
Which was the break of 332. And that broke the week of 30th of November, the first week of December, and that's continued higher towards the 8-year highs. So we should get a little bit of resistance here, but Goldman's calling for basically looking to kickstart a new commodity super cycle. So that's sort of like the move that we see.
While the world economy slows down.
Well, it's more of oh, look at that! It just popped up. I didn't even mean to do that. Yeah, this is Goldman Sachs looking at the 2020s. We believe that similar structural forces to those which drove prices in the 2000s could be in play. You know, you get the commodities at the sort of like, you know, the end of a sort of like a downturn, that they start to pick up as manufacturing starts to pick up. So, you know, COVID, once COVID is, you know, controlled or under control, you're going to see the economy expanding again, and a lot of commodities required to sort of like do that. You're already seeing it in China already. Hence, they're sort of like their prices running away with each other. So yeah, it's
I always thought that, or once read that commodities are generally the sort of late cycle indicator with equities. They're sort of the last thing to rally.
Yeah, and but also they're sort of like they're at the they're part of the growth of an economy as well. So that that you'll sort of get that last spurt, but also you see commodities being really the required. Well, it depends what it is, isn't it? If you don't need the actual commodity, the metals themselves, to sort of for the next expansion phase. I mean, maybe it's just sunlight we need, wind.
That's
fucking lovely at the moment.
That 2020 low was in March, wasn't it? Same as this one.
Yeah,
which one? This one here?
No, the 2020.
Oh, sorry.
That little drop off, obviously, when all the shit hit the fan. But.
Yeah, and you're sort of seeing this. It's going against the grain, really, because the economies have shut down and demand has disappeared for anything and everything, apart from technology, I suppose. But then obviously, technology components really need sort of copper and things like that to sort of like build out silver and gold and all the precious metals. So that's why we're seeing that. Yeah. So all pretty sort of like rosy on the commodity front. Obviously, we've seen, as you said, I'll have a little bit of a look at. It's my weekly chart on the oil prices. It just seems to be pushing up, heading towards the 78.6 fib, which is around about $53. But an AB equals CD correction takes us all the way up to way above $66. So that's coming in. The actual measured move is 68.35. But I'd be more aligned with the 66.53, which was the previous swing high back in April 2019. That's where I'd be looking to target on this oil move. And as you say, as Saudi Arabia seem to be happy to cut their production, allowing others to sort of like take up the mantle, it seems a sort of like, you know, that they're going to sort of like try everything they can to keep these prices elevated. So yeah, all positive.
Great. Thanks, Steve. So we obviously identified some pretty strong trends, but none of us can seem to pick a decent trend on the gun to the head stuff still.
Right. So my call of 3 winners yesterday was.
We got one winner. Steve had a win.
Only just though.
I mean, but you were going with the trend on gold, and it was by I think half a tick. You maybe stayed in the trade, maybe even less than that.
Yeah, I think it was like the low was something like 1939.17 or something.
Yeah.
So I just about held on to that.
Don't worry about that. A win's a win.
Yeah, exactly.
So yesterday we had a short on cable, which stopped out. We had a long on gold, which Steve made 0.75R, and Ian stopped out on dollar index. So yes, the slide continues. It's quite painful, and you know, I don't know if this was just luck here or this is just sort of return to normal, or whether or not we are going to get back on, you know, start producing some winners. I'd like to think so. I don't think this is a fluke.
No, I think it's basically just the way the markets are acting. Like you say, the equity markets, the equity indices are just sort of like sideways. They're not really, there's no real trend. They're up at the elevated levels. But you know, if they're not moving, they're not moving. That's it.
No, that's right.
But let's not fight it.
No. Okay. So have either of you got a trade ready?
I'm going to go dollar index again.
Oh, he's surprised.
89.37 long, 89.94 target, 89.16 stop, so just under 3R. And the reason I've got my stop under there is because I'm just in case we get a little bit of divergence, just to throw everybody off. I'm on side already.
Mm.
Cash in.
So what I don't know, maybe this will help you out, but I was thinking of selling it because
Go on then.
yeah, that's one way of trying to get a winner, isn't it? Just doing the opposite of each other.
Yeah, you both get stopped out.
Yeah, exactly. So break to new lows yesterday. I'm looking for a retest of that break level to sell into. So going with the trend. I do see what Ian's saying on those.
I'm going with the
confluent.
news.
So
I'm going
let's
with
go
the Democrat
this.
win.
Where are we targeting?
88.25 you're targeting.
Is that the level, is it?
Yep.
Jesus.
Go on then. Selling at 89.37, stop loss at 89.65, target 88.24. 25, sorry. 4.37R. Let's see. Hopefully one of us wins. Right, Steve, what you got?
Win's big.
Right, I'm going to go with oil. I'm going to buy oil. Let me look at the hourly chart. Why am I buying oil? Because I think it's going higher. But why am I buying oil? Because I think it's going higher. So a little bit of a bullish flag formation here. We're just sort of like, so it's quite a decent risk reward. What's it trading? 49.80. We can have the stop quite pretty tight, 49.40, and let's go for a 3-to-1 risk reward, $51. That's WTI crude oil, not Brent. I'm getting long at 49.80, stop at 49.40, and I'm targeting a move to $51.
Lovely. Good luck.
Good. Yeah, good luck, mate. Okay, anything else in the news that I saw? Trump has signed an order banning transactions with 8 Chinese software apps, including Ant Group, which is Ant Group's Alipay, in 45 days. He'll no longer be in office, so it'll be down to Joe Biden whether or not to decide to enforce that. Another blow to Jack Ma, who is Ant's co-founder, who hasn't been seen in public since Chinese regulators halted the Ant's $35 billion IPO.
Yeah, 2 months.
And launched an antitrust probe into Alibaba. So I think people are getting a little bit concerned that they haven't seen or heard from him.
Yeah.
Bit dodgy.
Yeah, that happens. He spoke out against the Chinese, and they've sort of silenced him. So I don't know how silenced is. Hopefully he's all right.
Well, it's an indefinite silence at the moment. Hopefully, hopefully he's all right.
He's quite a quirky character, so I do like him.
Yeah.
He's always been a bit outspoken, but obviously you can't say anything bad about the Chinese. I didn't say anything bad about the Chinese just now, by the way.
No, just reporting on a story. Yeah.
You see a big blank space here tomorrow.
Okay. Otherwise, news. We've got Eurozone PPI at 10. We've got German CPI at 1, and also German harmonised CPI at 1 as well. So, bit of data out then, and we'll be waiting for result from this election. Any ideas when we're expected to see that, Ian?
Well, I don't know. When it's saying it's on 98%, I mean, I just did a Google search, and the Democrats
2% to come.
The Democrats are claiming the win, but it's not official yet, and she's said that she's not giving up. So I don't know. Okay. It's the honest answer.
Well, we'll wait and see.
And we've got FOMC tonight, so it is all about the dollar, isn't it, today?
Oh, okay. Great. Well, good luck to everybody if you're trading. We will be back tomorrow morning, and until then, good luck.
Yeah, cheers. Good luck.
See ya.
Cheers.
Bye.